coming off here. Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy. He's joining us this morning. Scott, good morning to you. The Fed told us not to be too concerned months ago, and we kept running around, like our hair was on fire going, Fed Chair Jerome Powell, look at crude, it's at 77. Look at lumber, look at all that. And since they've mostly come off, and here we can see CPI for the most part also coming in a little bit softer than expected. I mean, this really sort of puts the damper on some of those inflation expectations that some had hoped for here.
Yeah, this one is a surprise for sure, as the street really expected a stronger number here, and the market is reacting very positively to that. Is it a one-off? Is this the continuing trend as Powell and the Fed, has said that it will be? That still remains to be seen. But this is something to be said for what they have been saying, at least this one report.
Scott, we started off the show looking at the four major indices in negative territory and just kind of the sideways action we had seen in the overnight session. Not a lot of directional conviction, but take a look at this chart. This is the 1 minute time frame. Scott said a bit of a favorable reaction to this number. I mean, to say the least, 20 points to the upside in the ES, and we're now just 8 handles off that high from yesterday, taking out the overnight high as treasuries spiked, mostly the shorter dated, but certainly the rates are coming off here in reaction to, Scott, it just sort of makes me think about, again, how for one, the focus here is obviously on the consumer, and without inflationary pressures, again, if we could get the easing of some of that Delta variant, here you can see all four major indices, the S, NASDAQ, Dow, and the Russell are getting a little bit of a lift. If we were to lift some of those Delta constraints we're seeing here and some of the, weakness or unknowns tied to, retail sales and some of these other sentiment numbers that we see from investors, from consumers. We could really see a nice lift here as we head into the holidays, where you're already hearing about increased spending into the season, into this winter months.
Yeah, no doubt about it. I think one of the Fed's and quite frankly the market's big concerns, Ben, is that if people continue to see rising prices, maybe that's going to then flow into the workspace, and employees are going to start asking for pay hikes, which could start a wage hike spiral, if you will. I don't think that's going to happen. I don't know that anybody believes that. I think that is a concern out there. However, you get a number like we just saw today, which, it's a muted number. It's not to the upside here. And that, as you said earlier, that kind of abates some of these fears right now.
Well, I like that, Scott, because ultimately, a reflection of what we're seeing here in terms of those fears aren't necessarily present yet, at least in terms of the treasuries. We've seen them mostly sideways in this bit of a range here. But, I do like the idea in terms of, many of these trends that we've seen have been supported. Consumer trends, market trends have been supported by rates at a lower level here at this point. And again, no indication that that's going to change at any time soon. Let's talk a little bit about some of the commodities that have been focal points for investors and traders, because they feed back into that inflation discussion. Yep. Ultimately, in many ways, one could argue that's where it comes from. We're starting to see energy prices back on the move here. Maybe some of those concerns, those uncertainties would be back into the discussion. Should we see crude back up above 77? Natural gas certainly on the move higher. That's a factor for many who heat their homes. Ultimately, it's up and through the $5 level. We mentioned at the top of the show 7-year highs. OPEC, the IEA, certainly contributing to this, as is the case with the hurricane. What are you seeing, and do you expect this bid to continue, or much like some of the other pressures we were talking about in terms of the inflation discussion, will this subside as well at some point? Is this more kind of seasonal or tied to some of those smaller short-term factors just mentioned?
Well, you really have the perfect storm in the commodity space right now. Number one, you have, and this is a good thing, you have maybe a moderation and easing of the Delta variant, right? So if that is the case, and we all hope it is, but if that is the case, you're going to see demand picking up across the board. So that's number one. Number two, we've seen a weaker dollar over the last couple of weeks after hitting that 93.5 level or so. We've seen the dollar really come off, a lot of pressure on the dollar, which that is very supportive of commodity pricing here. And then number three, talking about a storm, you've got the follow-up to Hurricane Ida. You've got the new storm now, which, there's big concern about supply now. The demand is picking up, where maybe the supply now in the oil space is going to get hit because of the storm. So you really have these three factors here all bringing massive, massive tailwinds to the commodity space, especially oil, especially natural gas. And like you said, we're seeing natural gas trade at 7-year highs here. And it's not just the spot price of natural gas, Ben. If you look at the futures pricing all the way out to 2023, we're seeing a continual rise here. So I do think that once the storms, once Hurricane Ida, the effects from that kind of goes away, and this new storm that's now hitting, once those kind of go away here, which hopefully is going to be sooner rather than later, that may, ease some of the pressure here. But in terms of what we're seeing with rising oil prices, I do think we can continue higher.
All right, well, it gives us something to watch. We oftentimes tie that to the indices, so we'll watch the correlation and the relationship the two share as well. Speaking of relationships, and you kind of scratched the surface there in terms of talking or briefly mentioning the dollar. I'm watching it on the move here lower in reaction to some of the reports this morning. And talk to me about what you're seeing. Are you surprised to see it holding up around this 90, well, just below the 93 level, still mid-92s after a failed attempt to get something going up above the March highs?
Yeah, it did trade yesterday or settled yesterday at about a 2-week high, but still the trend, the near-term trend is pressure to the downside. And the fact that it failed again a few weeks ago at that 93.5 level, the bears have to be happy about that. I don't know what in the near term here is going to push the dollar higher, especially after we see a report like this today in CPI here. And again, a weaker dollar, Ben, is very, very bullish for the commodity space.
Not only bullish for commodities, but also bullish for the U.S. indices as well. Yep. Certainly multinationals, and we oftentimes reference that. Here we're looking at the dollar, the move off the 93.75 highs down to 91.80. Scott, just a quick thought in terms of Bitcoin and some of the volatility we've been seeing there recently tied to some interesting fundamentals. What are you watching in terms of levels and what's behind some of the price activity?
Yeah, interesting is a good word to describe it, because over the last week, 10 days or so, we have seen what should have been some technical levels, both on the upside and the downside, be breached pretty easily. So I really feel like we're in no man's land right here. That. I do think that once the dust settles here, Bitcoin is going to continue its trend higher. I do think that it does need to break the 52 level, which it touched briefly, last week. Mm-hmm. I think it needs to breach that to really make a breakout. In my opinion, again, looking at some of the technicals, most of the technicals that I watch here again, it's a head scratcher. It really is. So we really do need to look at some of the fundamentals, maybe what the dollar is doing, though. I think we've kind of, come to the conclusion, at least I have, that there's not that much of a correlation between the dollar and Bitcoin. But I do think the overall trend is still to the upside, but there's really no number right now. There's no number at 43, 42, 40, or even on the upside 48 or 50 that I would pin my hat on right now and say, okay, this is the number we really have to look at.
Okay, well, ultimately, bulls want to see it above the 65,000 level. You mentioned the 52,000-ish spike that we recently saw, so we'll keep an eye on those. But I'd agree, it's tough for people to accept a $35,000 range, but it seems to be in that 65 to 30, roughly, we'll call it. And again, as you mentioned, very random within at this point until we break out. Just seems to be a bit of a chop, and also tough to tie it to anything as well. Scott Bauer, CEO of Prosper Trading Academy, joining us and covering a couple of the focal points that are on the minds of investors and traders as we get set for the cash open, as we digest that number, which is coming across the board here. The CPI, again, a little bit weaker than expected. Let's check